Oh, hi everyone, and welcome to this morning's webinar, a Forex webinar for the London session. As always, thank you for your patience. We were just sorting our audio and it's actually working, which is great. Good to have you join us today on the first day of the new trading month and the last trading month of 2020. My goodness, what a year. Lots to say about that. Probably more so this afternoon session when we look at the at equities and the indices, but there's certainly a lot going to be going on in well, certainly the next 2 weeks up until the 16th of December, which is when we have a very important FOMC meeting. But I'll go over that with you in a second. Once we quickly have a look at the disclaimer, which I know you can see on your screen. It's really important that we show this to you because, as you know, trading can be a risky business. So please don't ever think of using money that you cannot afford to lose. And as always, we will be looking at the forex charts, the forex market, using volume price analysis, the methodology that is explained in the books that are on Amazon, but we also look at what's happening on the fundamental side of things, what news releases are coming up. And this week, of course, we have the all-important non-farm payroll on Friday. So we've got a raft of central banks. We've had the RBA overnight, and we have the ECB, and as I said, the Fed as well. And we also look at what's happening in related markets. And by related markets, it could be the bond market, commodity market, or the equity market through the Globex, through what's happening on what we call the indices, primarily the US indices of the YM, which is the Dow Jones, the ES, which represents the S&P 500, and the NQ, which is the NASDAQ, because they give us the sentiment. In other words, the sentiment in terms of what kind of mood is the market in? Is it willing to take on more risk, or is it very risk averse? And it started very brightly this morning. Yesterday was a bit of a funny day, primarily on what we call profit taking. It's been a fantastic month for November, and so it's not unexpected, to see, as I said, profit taking. But mood seems to have a good mood seems to have been restored, and that has an impact on what is happening with certain currencies. And sometimes currencies, the risk-sensitive currencies, they can actually lead the market. So you can get a bit of divergence between what you see on forex and what you see in the markets. And generally speaking, it's the forex which is probably representative of the truer picture. But we'll have a look at that when we see the charts. And so the books, all the methodology and our approach to forex is in the books that you can purchase on Amazon. And the next step for David and I was really to put everything together in this program, what we call the Complete Forex Trading Program. We have now hundreds of students on this program, and really delighted for them that so many of them are doing so well, basically. And everything is, as I said, in this program. It's covered. People ask us, well, if I buy the books, do I actually need the program? Well, in some cases, no. We have traders who happily take the concepts of volume price analysis and the concepts of the 3D approach, which is a book called The 3D Approach to Forex Trading, and use that as the basis. But they are just, an introduction, if you like. It's an initial explanation. What happens in the program is things are taken to another and a much deeper level. And these are the modules that make up the program that you see here. What we've done, we have now added a bolted on, which we think is really just the sort of final bit for traders, and that is to give them access to a funded program. In other words, you do the program, you come into the program, and then you have the option, if you so wish, to trade other people's money, our money. Oh no, it's not your money, and it's absolutely no risk to you. It's all explained at the website at www.quantumtradingeducation.com. There's also a video on it on my personal site, which is just Google Anna Coulling YouTube, and you'll find the webinar there that we did to explain how the program actually works. And the unique thing about this program is that you can actually trade your way through the different levels where you get to handle $2 million. And as I said, the most key part of this is absolutely no risk to you. Right. With regard to with the forex, on the forex side of things, and just generally, we have actually developed. Sorry about that. It's just I always forget to turn off the squawk from Financial Juice. We've developed some very particular indicators to help us with our analysis. They are also supportive of the VPA approach that we use, and also our approach to how we approach our breakdown of the forex market, which is essentially one of flows, first of all, flows into individual currencies, and then how that is reflected. The strength of those flows is then reflected into the individual pairs. But in all honesty, the best way to see this is actually to see it in action. These are the four very, very specific forex the indicators that we have developed. We've got the currency strength indicator. This picks up, as I said, the individual flows, what's being bought, what's being sold at this particular time, and in the time frame that we are considering. And this morning, if you've just come to your terminal, you will see that it's been a pretty good morning for British pound, David, hasn't it? Yeah, there's been a lot of buying of the British pound. Well, the CSI will certainly pick that up. What the matrix then that does, it then tells us, well, where's that buying? Where is that strongest? Is it against the US dollar? Is it against the yen? Is it against the other currencies that make up the other currency pairs that make up what we call the matrix, the 28 pairs that we focus on? The array then looks at the strength of that trend, and then the currency heat map looks at the performance across multiple time frames, as we see here, and also ranks the pairs in terms of weighting across the 28. It's a very, very clever indicator. Right, so that's basically what we are going to do. And what I was particularly going to focus on today, and it's a topic we've been covering in a number of webinars, is looking at the principles of support and resistance. There are those of you perhaps who just watched the webinar, have read the books and come along to the webinars, will have heard me say that VPA is built on 5 principles, and that's obviously price action, volume, candles or candle patterns, support and resistance, and time. And time, not just the time of the chart that you're trading on, but also trading in multiple time frames. Now that doesn't actually appear in this sort of put in this way, if you like, in the books. It's something that we developed as we looked at putting the program together. But support and resistance is a key part. It's a fundamental part of technical analysis anyway. How you measure, how you draw your support and resistance on your charts. You take your pick. There's a Fibonacci, there's Camarilla, you just draw lines. Do you draw horizontal lines? Do you draw trend lines? Do you use Andrew's pitchfork? There's any number of ways of looking at support and resistance. Now, all of those that I've mentioned are price-based support and resistance. But what we've done, because as I said, this is we use the concept of volume to help us determine whether a price is genuine or not, is we actually look at the principles of the concept of support and resistance through the prism of using volume. Now, the reason I've got the Aussie yen up is not because there's a particularly, there's a potential trading setup coming on board here, as it were, because I want to, because it really does explain this concept in greater detail. And we've also developed a very particular indicator to help us map, if you like, where the volume footprints, if you like, on the actual chart. And this is the indicator that we call the volume point of control. Now, some of you may have already come across an indicator which is It's a standard indicator on some platforms. It's not available on MetaTrader either 4 or 5. It's certainly available as standard on NinjaTrader and some of the other platforms, and that's called volume at price. And this is also mentioned in very simple explanation of how it works in the books that I said that are on Amazon. We took that, the volume at price, and it's a fantastic indicator because what it does, this is not the volume at price, this is actually our interpretation using what, as I said, the volume point of control. Let's do that, make that better. There we are. Basically, what we're looking at with the principles behind, as I said, volume at price, is we're looking at the areas of the chart, and you can see these on this histogram that you see here on the y-axis. What we're doing is we are taking volume and we're taking it onto the y-axis of the chart, and we're looking at a volume and price over time. When an instrument, when a market is being traded, you have what is called transacted volume, and there are zones on the chart. There are periods in the trading session where essentially the price isn't going anywhere. It's you then create these bulges, if you can see here on the chart, and what that represents is it represents, in terms of market profile, it represents what's called a value area, in the sense that there's no clear direction. There is no willingness by the market to take this price either in one direction or the other. Now, what volume at price does, the standard indicator does, it simply, if you like, displays these bulges, if you like, within a certain number of look back bars, if you like. So you get these sort of extensions, as you can see here, and you've got it here, and you've got it a little bit here. Now, what the volume point of control does, it actually, first of all, it marks out the most significant one, and the most significant one is obviously, you know, the where the price has been at this level for the longest, if you like, and it's clearly here and it's clearly marked. So you get this yellow line that's then painted on the chart. What that tells you, particularly when it is trading at this point, is it gives you that information. Not a lot is going on at the moment. Market participants are simply, you know, oscillating within a range. It can be sometimes it can be quite a wide range, particularly on the slower time frames. So we know now there could be all sorts of reasons for that. It could be the time, the time of the trading session. This is a 24-hour market, but there are certain periods during the trading session when certain currencies and currency pairs, they're not going to be moving very much, so they're going to be contained in this area here. Now, something's going to happen, something's going to come along, because markets don't stay in congestion very long, then that will push the price one way or another. And we certainly can see here there's been an attempt to break away from this area, and it's gone back to retest it, then it's attempted to break again, and it's gone back to retest it, and now it looks as though we are getting a move lower because London has come in. That is a catalyst in itself, so that moves it. What this indicator also does, so it marks these areas of, first of all, we've got the volume point of control, but it also marks the areas where you do have these bulges, and these are what are called high volume nodes. It's where the price has in the past, it has paused there, and we've had a period of congestion at that level. Where they go in here, and you have what we call low volume nodes, is these are also important areas, because when price comes to a low volume node, the expectation is the price is likely to go through there very, very quickly. So the volume point of control not only gives you, as I said, this volume map on this particular time frame, but it also gives you a heads up of what to expect, how the price action is going to behave once it approaches one of these zones. And what we've also done, if you notice here, these lines across here, they also act as support and resistance, but from a volume-based perspective, and they become really important at the extremes here, where we have this point here at 76 spot 70, and what we've got here 76 spot 95. So they act as, well, you know, if this piece of price action here, you know, where is it, if it's going to go, you know, going to break away from this area here, where is it going to go to? Where is it likely to pause? We know it's going to pause at these levels that are shown by these lines here, and at the extreme, this is where potentially it is then possibly reverse. We don't know. We'll have to wait and see. But you use this in conjunction with price-based. This is just looking at the chart through the prism of support and resistance, using, as I said, using volume and using the volume point of control to give you the kind of what we call the fulcrum of this chart. Now, you don't just use it in one time frame. This just happens to be the 5-minute chart, and I really liked because there's not you know, there's no volatility in this chart, and it was easy to pick this out. And what I was looking at actually was where the volume point of control is. It is at here at, where are we here, 76.86. If we go down to the 1-minute chart here, right, 76.86 actually corresponds to the outermost level on the 1-minute chart. So therefore, what that tells us is not only does the VPOC here, where are we here, 76, where are we, what's that, 76, where are we, 76.86 here on, sorry, the 1-minute chart. Let's go back to the 5-minute for a second. Where am I? There we are, there we are, 76.86, right. If it gets through here, if it gets through this part here, and it looks like there's some volume coming in to push it higher, we can go down to the faster time frame and also have an idea of where it's likely to be heading next. And in fact, it's got here already. It's posted a volatility candle, and you know, it's the London session. What happens at the London session? We get this additional volatility. That tells us immediately, had it broken through that VPOC on the 5, where was it going next? Now then we go upstream and we look at a slower time frame. So we go up to the 15-minute chart, and I'm using the time frames that are on the MT4 platform, because I know most people, I have MT5, but I know most of you use MT4. And what this gives us is a whole new set of targets, if you like, price objectives. We've got price-based objective up here at 76.94, but using the volume-based one, where is this likely to go to if it carries on higher? Well, if we look over here to the left, we've got here an important high that we've got here at 77.04. This is not to look at, well, where do I get in, where do I get out? It's simply giving you an explanation of how to interpret the volume support and resistance that you are seeing on the chart. As I said, you can use this using volume at price. What volume at price is, you then have to do all these calculations. You know, you have to kind of pick it out yourself manually, whereas the volume point of control does this for you. It draws in these lines, it draws in the high volume nodes and the low volume nodes. You have your fulcrum, so you immediately, it gives you the structure based on what the price action is, and the price action at the moment for the Aussie yen on the 5-minute chart is pretty much, it is still around this, you know, it's still pretty much in congestion at the moment. It's been, you know, it's trying to break away. It keeps coming back to test the levels, as I said, based on volume. But if you then, there's another way of using this indicator, is if you look at the daily chart, and this is even more important, it tells you, well, is the Aussie yen actually in a trend? Well, no, it isn't. Why isn't it? Because it is trading around its own volume point of control on the daily chart. Yes, you had a nice down candle yesterday, and yes, we've got a sort of up candle here today, and they look very, all that looks interesting. But actually, when the price action is in this, as I said, not in this nice trend here, that has an effect, it has an impact of the type of price action that you get on the faster time frames. It's actually quite choppy. It may look very, nice and smooth and neat in this one candle here, but actually, because it is trading in a congestion, it's trading sideways, that is what is reflected. You get more choppiness down on the faster time frames. And what happens is on the, I have to move this, hold on a second, move that over there, there we are. And so we looked at that with volume, but what we also do is we look at price-based support and resistance. We use, as I said, we have a proprietary indicator that draws the S&R lines on the chart. I haven't got them here. What I have here is what we call our Camarilla indicator. And by looking at, well, where is it trading? Is it trading around a key level? And here we have the R4, and what's happening here on the R4 on this time frame? Well, it's trying to get through, and it's not really having much luck. And when you put these two together, more often than not only it kind of tells you to kind of stay out, because we all like to know when to get in, but sometimes it's more prudent to know when there isn't a trade to be taken at the moment. And if we wanted any further confirmation that there really isn't a trade to be taken in this pair, if we look at the lines of the CSI, what are they telling us? Well, they are moving in the same direction. They're all wrapped around, the two lines are wrapped around each other. What is that telling us? At the moment, there is no divergence. As traders, we are looking for divergence. We are looking for a point where we have here where the lines diverge and the trend is then created. And as we say in the book, congestion phases, sideways movement is where trends are born. That's where they are spawned. But you've got to be able to recognize them on the chart. And using an indicator, using the concept of volume of price and the indicators such as the volume point of control will help. It will just frame the price action. It gives context to that and will help you explain, do you know what, I've got to be patient here based on these timeframes. Now, just very quickly on the Camarilla, I'm at the R4 here, which is on the 15-minute chart. The indicator works in a number of different ways. I've got the hourly chart, and the reason I've got the hourly chart is because the values on the hourly chart are the values that will stay on this chart until the end of this week. All the time frames up to but not including the daily are refreshed every 24 hours. They're recalculated. The hourly chart is stays for the rest of the week. Now, what's interesting about the hourly chart is you have the R1 and you have the S1. This is what we call, it's like a buffer zone. It's like a neutral zone. Again, it tells us congestion. So not only do we know we have congestion on the daily chart, we also have price-based congestion on the hourly chart. So what's going to be happening to the Aussie yen? Well, it's actually bouncing between this level here and this level here. Now, if you were on very, very fast time frame, you possibly, maybe that's the points where you would be taking, on the seconds chart, possibly, we're looking at, when we look over David's Ninja Trader chart, maybe that could offer you a potential trade. But for those of us who are on these time-based charts, what Aussie yen is telling us and the indicators are supporting is that at the moment, we really do have to be patient. And the Renko, which I also use, you can see here, it does have a downward, let's be honest, there's a downward bias to the price action, but look at the choppiness that the Renko has picked up. The Renko works in the sense that it gives geometry to, it's just price, that's all it is. And what I have on here is I have the S&R lines, the standard indicators, which is all price-based, but you put it all together and, we're waiting for some clear divergence that we can see on the time-based chart. So we can see all the clear points of support, support and resistance. Now on the MT5 version, you can't do this, but on the MT4 version of our indicators, you can actually put the Camarilla on as well. One of our traders actually reminded me of that a little while ago, and it's absolutely fantastic. It means that you can port these lines over to here, and you can see as the as the price action develops, comes to these areas, and away you go. And how do you use these zones, these areas, price-based, volume-based? Well, you use them as potential price objectives, but you also use them for where you place your stop. And it looks like we are going to be looking at a move lower. That moved quite quickly, as I said, because it's on a low volume node. Now it's coming to a high volume node. This is probably where the VPOC was at some point in the past. And as you can see immediately, it kind of slows up a little bit. It slows up and it pauses. And it's going to take a little bit more effort to get through these high volume nodes. It'll probably, perhaps it'll have a little bounce higher, as we can see here. But where do you think it's going to be heading? Well, if it's going anywhere, it's certainly going to this last point that we see here. Right, so that's a quick run through of the volume point of control. As I said, I just wanted to use the Aussie yen because it's not whizzing about too much. And you could see the development of how to use the volume point of control based on the volume at price indicator. But as I said, we've incorporated elements of what's known as market profile, as it were. Then we have our price-based levels that we have on our other charts here. We know where we're aiming for, and on the daily chart here, this is now a strong area of support, because the VPOC also acts as its own, it's the fulcrum, it also acts as support and resistance. And if that's going to go lower, where's it going to go? Well, yesterday's low would be a pretty good target. But Aussie yen also is a pair that responds to sentiment and what's been happening over on the indices, as I said earlier. Yeah, they've bounced. They're bouncing back quite nicely. They're coming off slightly. That was up at 225. We have to keep an eye on what is happening with them. I said earlier, it's the next 2 weeks are going to be really, really important. It all culminates with the the 14th is the date that the Electoral College reports on basically who's going to be the next president. 16th is the FOMC. We'll see what happens. I don't think they're going to be raising rates. The market is absolutely delighted that if Biden is going to be confirmed as president, we're going to have Janet back, Janet Yellen. She's going to be Treasury Secretary, and they're absolutely thrilled at that, because it means basically means more stimulus, lots of money, push equities even higher. So as I said, but the next 2 weeks are going to be pretty packed with central banks. We've got the ECB, we've got the BOC, and then, thank goodness, it's almost Christmas and we can all have a rest, because it's certainly been a very, very exhausting year for very, very many reasons. And what's happening today in terms of lots of news, lots of data coming out. It's the first week of the trading month. We've got the PMI data. Markets kind of fundamental data is awfully interesting, but it's the virus that's driving things, the vaccine. Oh, and we've got Powell coming up this afternoon as well. So as I said, it's certainly going to be a very busy 2 weeks before we come to the Christmas holidays. And I think that's all. Is there anything else you want to add to that, David? Have I missed anything? We've got NFP on Friday. I'm sure there was something else I was going to, there's something else happening, and it's completely just slipped my mind. It'll come. Oh yes, how could I forget? Of course, you've got Brexit. How could I forget? Apologies about that. Yes. Are you on the British pound, David?
I am indeed.
Oh, well, there we are. What a good time to move over to David. If you've got any questions, please just pop them into the chat box. With regard to any of the indicators that we mention here, that you see here, you'll find there's loads and loads of videos at the Quantum Trading channel. YouTube channel. David's done a whole bunch more for TradeStation actually, and actually how you can use these indicators in different sort of creative ways, what they'll do for you, how they actually work, and why we think you should be using them on your chart. And what did I say here? There we are. So we had that little quick rush down because it was a low volume zone. And now as soon as it hits a high volume node here, it kind of, oh, well, there we are. It kind of has a little bit of a pause, and it helps to explain why, you know, you're in a trade and you see the price move and suddenly it kind of stops. You say, well, what's happened there? You know, where's the momentum gone? That explains where the momentum has gone, and is it actually hitting then an important price-based level as well. Right, over to you, David.
I've had cable up, and Anna mentioned the seconds chart, which is exactly where I've been for the last, well, really ever since Anna's been going, because I wanted to show you the wonderful Venus flytrap move, what I call the Venus flytrap move. Right of it, this is 8 o'clock, so this is London getting underway. I mean, it just hits you in the face. Absolute monster amount of volume. Volatility trigger comes in. This was between 8:05 and 8:06, so 5 minutes into the open, and bang, up it goes. Big volatility candle, ton of volume coming in, lots of selling in there by the market makers, and then down we go. And it's confirmed with the trend monitor, which has transitioned through classic transitional phase, gone from bright blue into darker blue, out the other side into darker red, and then through and out into bright red of the bearish trend lower. It's what we see all the time. It's what we see every single session crossover, particularly at London, but also in the US session. And you'll see it reflected in that this is obviously 15 seconds, so it's pretty quick, but obviously you'll see it reflected in the slower timeframes. For example, what you will often see in the US session is where there's been heavy buying or selling of a particular currency through the London session, maybe 3 or 4 hours or so. You'll often see that pause, you'll see traps, you'll see major reversals coming in as the US markets open and they reverse what has been going on in London. Happens relentlessly. And this is just a micro example, if you will, of what to expect at session crossovers. It's revealed with volume, it's revealed with the indicator. You know, expect it, wait for them. And the other reason I've focused on this also, I'm just going to pull this across. I've got the dollar here. I've got this on Renko on Trading View, and that's what's been happening with the dollar so far this morning. Quite heavy selling, but in the last sort of 10-15 minutes we've seen this little bit of reversal coming up now. So the dollar, we're starting to see a little bit of buying of the dollar coming in, which is what's partly triggered that reversal on cable. You can also see the trend monitor here is starting to transition, maybe coming out into a bullish phase. We will see. I'll just move that out of the way again, so I've got my eye on that. So let's pop off the 15 second, move that out of the way. Let's go down onto the slower time frames. This is on 5 minutes. And then we're going to have a look at the CSI as well. This was 8 o'clock, so this is what we're looking at in terms of volume in here. Huge spike in volume on the 5 minute chart. Tons of selling in here, big wick to the upper body, volatility trigger as well, and down we go. Where are we going back to? Well, we've gone back to the volume point of control. No great surprise, we're trading around that particular region. It's what you expect to see. It's what you anticipate. And this is the whole crux of volume price analysis, of the indicators. They give you the information that answer the question, you know, what is likely to happen next? There is no guarantee of what is going to happen next, but at least it gives you a very strong sense of what is likely to happen. What is likely to happen from a volume perspective? You know, are you seeing heavy buying? Are you seeing heavy selling? What do you like to see from an indicator perspective? Have you got a volatility trigger on the candle? Are you somewhere near the volume point of control? Are you moving down to a low volume node? Anna's been talking about the VPOC for the last 20-30 minutes or so. You know, you've got a low volume node here. If this is going to break lower, then the expectation for any move through here is going to be pretty swift, because you've got nothing in the way of volume to act as a support platform. Then you come, and then the next question is, well, if I took a short position in this, where is it like to find some support? And you track down the chart. Well, clearly, for several reasons around here, because not only have you got volume acting as a support mechanism, because it's high volume here, going right the way out here, but you've also got these levels of price-based support on the accumulation distribution indicator. This is very strong. You've got a minor one here. You probably may or may not be able to see that's been tested once and held. This one below has been tested 4 times. This is a much stronger level because it's been tested and held more times than that. but between them together, they act as a cluster of potential support. So the question you're always asking yourself is, well, if I'm going to take a position, is it likely to deliver what I'm looking for in terms of my risk on the table? Where is it likely to run to? How much travel have I got in that particular position? Is it worth the risk or not? And all of that is answered either through volume price analysis methodology or through the indicators on the chart. Let's just go over to the CSIs and see where we are, multiple CSIs. There we go. Pop that out of the way. That's what we're seeing right now. We've seen, as I say, we've seen the strong buying of the pound, very, very strongly overbought up on the 15-minute time frame. The dollar equally is very strongly oversold down on the 15-minute time frame as well. But what we're starting to see, this is what we're starting to see, is some buying of the pound, the dollar rather, coming in, the red line. That's starting to be bought on 5. We're starting to see that develop on 10, and we're also starting to see that develop on 15. But the reason we're not seeing anything in cable right now is because the pound is flatlining up here. If this starts to dive over on the faster time frames, it starts to sell off heavily here, starts to roll over here on 10, starts to roll over on 15, then we will start to see the trend develop. But at the moment, we are not. So it's a question of, as always, it's a question of teasing out the opportunities. So if we go over to the go over to the workspace with the majors on. There we go. And I've got the futures up as well. The currency majors matrix, this is cable, dollar CAD, Aussie dollar, euro dollar, dollar Swiss and New Zealand dollar, all on the same time frame. And what it will give you is a sense of which pairs are moving right now and which are not, and the reasons why. And it's really reflected. Obviously, we've got, you know, this is 5 minute, I think, this one. Yeah, it's 5 minutes. So it's the same time frame, basically. So we've got buying of the dollar, which is fine. And what we're looking for is really to match that to a currency pair that we can take advantage of in terms of a trend. Now, the one that's moving at the moment is the Aussie dollar, which is the one over here. We've seen the weakness come in. We had a volatility trap. It's not particularly strong, I have to say. And what's interesting at the moment is, I mean, certainly in terms of Aussie, it wouldn't be one, certainly from a scalping perspective, I'd be looking at right now, purely because the Aussie is so heavily oversold anyway itself. And ideally what you're looking for in terms of jumping into a trend, let's talk about jumping into a trend, you really want it to be somewhere up around the middle here, because that is then going to give you the opportunity, and it doesn't always work out like this, obviously, but you're looking for the opportunity where you've got a similar amount of distance for the two currencies on each leg to travel. So ideally, you're always looking for something somewhere in the middle. It doesn't have to be exactly, you know, around the middle here, but somewhere in this center section where you're seeing those two currencies cross over, because then, all things being equal, they're not yet at their overbought or oversold states, and therefore there's a greater opportunity that trend will continue to develop. In other words, the one currency will move up to here and the other one will move down to here. If you're jumping into trends where they're very low, like this one was on the cross itself, or up here, for example, where you've got, you know, a huge amount of travel on one leg, but very limited travel on the other leg, it's not going to deliver. Potentially, it's a much, much higher risk proposition, because one leg is more likely to get into either oversold or overbought more quickly than the other leg. And that's not to say that particular trade won't develop purely based on the strength of one leg, but what we're always looking for is a closer balance as we can find, where both legs have got enough travel in them and are moving in similarly strong but different directions to give you that trend. Now, what's interesting at the moment, as you can see on 5, there's an awful lot of bunching around here. You know, these are going nowhere at the moment, and there's very little that we can really tease out of this. You can see, you know, you've got the euro rising, so you've got strong buying of the euro. You've got this buying of the dollar, which is starting to flatten a little bit, so the euro dollar's going nowhere. We look at dollar Swiss. similar sort of thing. The green line, the Swiss franc's rising, so it's pretty much mirroring what's going on with the dollar, so that's really not going anywhere. New Zealand dollar is climbing, is trying to rally in its own right. If the dollar now kicks over, which it seems to be doing, and I'm just pulling over, let me pull over the Renko because this will give you a heads up on it as well. There we go. We saw this little rally, didn't really develop very much. Now it's starting to roll again, so it's rolled over. The trend monitor did go into brighter blue, but it never actually transitioned through into, into darker blue, but it never transitioned into this color, the bright blue. So it's basically saying, okay, yeah, we've got a little rally going on, but I don't think it's strong enough to convert into a bullish trend. Now we're starting to see the pickup in the negative sentiment towards the dollar again. And Renko charts are just fantastic. I've got the multiple Renko set up here as well. If we get time, I'll hop onto that as well. So what we're seeing now is we're starting to see the dollar sell off again. We've got the New Zealand rising very strongly. That's why we're seeing a decent move here in terms of, it's still pretty choppy around here. And to jump into that one, you're really looking for it to clear some of this region here. We had the volatility, the downside didn't develop, and it's gone back into the spread of the candle, and now it's starting to rally. We've got trend monitors still flashing a positive sentiment towards New Zealand. So in terms of teasing it apart, that's what we're looking at the moment. So, you know, cables starting maybe to rally a little bit off there. Let's go and have a look at the currency strength on the multiples. And then we'll have a look at the array. There we are. That's the buying we're seeing in the pound. This is 1 minute, remember. So we're seeing some pretty strong moves there. And this is what I was trying to say earlier on about picking out trades which have opportunity. You can see the cross here. This was on on pound Swiss rather. Strong buying in the pound, strong selling of the Swiss franc. Don't need to look at a chart on 1 minute and sub 1 minute to know there's a decent strong move there. And it's also got pretty much an equal amount of travel left in it. So before the pound gets up into overbought on one and the Swiss franc gets down into oversold on one, you know, you've got equal distance of opportunity, if you will. Same sort of principle, a little bit higher up on cable. You've got the pound buying and the dollar selling here, but you know, it doesn't have to be around this center point, but at least here you've got that amount of travel on pound and you've got a decent amount of travel on dollar. You've got more travel on dollar. So, you know, it's an opportunity. It's certainly an opportunity worth taking. We have the same thing developing here on New Zealand dollar, much higher in terms of the dollar there, in terms of the dollar Swiss, in terms of New Zealand Swiss, in terms of Euro New Zealand as well. Now we've got some decent buying of the Aussie coming in. That's starting to develop here, hasn't yet developed on 10. Nowhere near developing on 15 yet. We're still, and as you can see here, the dollar here is still very much into oversold and the pound here is very much overbought. Now at some point, maybe during the morning session, the pound is going to sell off. It will roll off here and the dollar will start to buy. And at that point, I'm always looking at, as you know, at extremes, which is a completely different approach to jumping on a trend. If you're jumping on one of these trends, your stop loss is much tighter. You are not looking to take so much out of the trend because some of it has already been and gone. You've lost maybe a third of it. You're looking to take a chunk out of the middle. What I'm looking for as a reversal trader is I'm looking for an opportunity to get into a trend early before it even starts. The price I pay for that is much higher because this may stay up here, first of all, for a long time, which can be quite painful if you're not patient. You have to be patient trading reversals because they don't normally happen instantly. You've got to wait, you've got to be patient. And the second point is you have to put more risk on the table. You've got to set much wider stop losses because you have to allow for the constant buffering that's going on. I mean, the dollar may stay down here for hours. It may, you know, flip-flop around down here before it starts to rally and before the pound starts to sell off. So you have to set wide stop losses. It doesn't matter whether you're trading this tactical approach on a fast time frame or a slightly slower time frame. So if you're on a 1 minute, for example, you would still have to set wider stop losses, but obviously they will be relative. So I'm trying to think of an analogy, or not an analogy, but if you were scalping on a 1 minute time frame, let's say, and you were jumping into a trend, your stop loss might be, I don't know, 3 or 4 pips, maybe 5 pips, something like that. If there's a strong trend and it's got momentum behind it. If you were doing the same thing on a reversal trade, you would probably be looking at something like 10, 12 maybe even more than that. And as you go out to the slower time frames, then you obviously that goes up. So on a 15-minute, you might be looking at something like a 20 pip range or 25 pip range. You're putting more risk on the table, but then the reward is higher because once this starts to move, there's no guarantee it will, but at some point it will, because the forex world is one of mean reversion. These currencies never stay overbought or oversold forever. They are constantly in a state of flux. They are constantly moving from overbought to oversold and back again. And in a way, they do encapsulate almost the perfect market for trading, because there's always something to trade. There's always an opportunity to jump on some sort of trend. There's always an opportunity to trade some sort of reversal. And it's just a question of picking them out, deciding what your tactic is, deciding what your time horizon is, and getting on with it. So it is very much the perfect example, if you will, of an oscillating market that just does this all day long. It's like a vibrating string on an instrument. It just goes back and forth the whole time at all these different levels and all these different time frames. You can see New Zealand here, it's just got up into overbought. Dollars down here on oversold. Pound starting to roll over a bit. We've seen this buying of the pound. Let's just hop over onto the charts we were on before, and you'll just see that on the 1 minute, on the 15-second rather. There we go. Here we are. This is what we're seeing basically. Let's go up onto the 1 minute. So that's what we're seeing there. We've seen that that nice little rally, perfectly tradable, breaking away from the volume point of control. Nice engulfing candle here. Then we go up through the various levels. We went through this, what was acting as resistance at that point, up through it. Now we're starting to maybe top off, moving up to this prior level here. Just have a look at the slightly slower time frame. Well, let's go on to the 15-second again. There we go. That's where we were. That's the trend. You know, you look at that sort of time frame. We had a volatility here, lots more volume coming in. On that occasion, didn't follow through, but it went into congestion again. Now we're trading up around the volume point of control on 15-second. What are we expecting? Congestion. It's what we're getting. We're seeing lots of volume coming in. This looks, and I'm just looking over onto the Renko again. Let's just pull that over. This is what the dollar's doing. It's still selling off, which is nice. You can see that transitional phase there. It went into darker blue, but it didn't go into bright blue. So just confirming, and of course you'd have this in multiple time frames as well. This is the Dixie, by the way. So that's moving nicely lower. So, you know, we're looking for selling of the dollar again, opportunities for buying of these majors. Let me just come out of that. Let's go over onto the majors matrix again, just for a moment. In fact, let me go to the futures, currency futures. This is the equivalent of looking at the dollar matrix, because these are all currency futures. We've got the, waiting for that to load. Over there, there we go. A lot of data coming in here. This is the 6A, this is the 6B, so this is Aussie dollar, this is cable, this is pound dollar. This is CAD dollar. This is not dollar CAD. This is the inverse. So it's CAD dollar. This is euro dollar. This is yen dollar, and this is New Zealand dollar. So these are all. The nice thing with the futures matrix is you are looking at a straight line view of dollar, because the dollar is always the counter currency. So what we're looking at here is really sentiment towards the dollar. Is it universal? Short answer is yes. And then it's a question of picking out where the strongest trades are, and they're all developing nicely. Forget the dollar yen dollar for the time being, but certainly looking across the piece, starting to see that move quite nicely. Probably euro dollar. That's you know, it's up here, but again, you know, this is on 5. It's a question of how much travel is left in that particular trade. Trend monitor's keeping us in through there. There was a decent amount of buying came in there, supporting it. Now we're starting to see rising price and rising volume, which is what we want to see. This is classic VPA, classic Wyckoff, if you will. This is basically price and volume in agreement, not on a single linear price candle and volume bar basis, but actually over a group of bars and candles, which is an extension, if you will, of of the methodology, because what we're looking for is not only anomaly and confirmation in terms of the linear relationship between this and this, we're also looking at it in terms of, okay, we've got a big spike in volume there, it's nice to see, you know, and no volatility trigger on that, which is interesting. It's certainly spiked up. Volume and price are in agreement. A lot of volume in there, probably a bit too much to be honest, but you know, nevertheless, it was a nice move higher up into a low volume area, potentially a little bit of a pause point. But I'm over on the right hand side, I can see the Dixie is still descending nicely. It's now down at 91.6, and the Renko is taking it lower. Trend monitor's keeping us in there. So, you know, all things being equal, that looks okay. We've got a volatility trigger over here on the yen dollar, which is interesting. And again, it's another reason for using related, I call them related markets. Obviously, they're in the same financial sector, but you are looking at trading one particular currency pair, but you're looking at what's going on in other pairs, because it gives you views on volume, it gives you views on the indicators, it gives you a whole bunch of information. See what I mean about the pound? It's still strong, it's still overbought, very heavily overbought, but it's not coming off yet. It's just continuing up here, and it could stay up here and it could climb higher. It's as simple as that. It's just a question of picking all this stuff out. The dollar is very oversold, but it's not yet ready to roll. Let's go back. Let's go on to the CSIs again. Multiple CSIs. Where are we? Where are we? There we are. There we go. There we go. The pound is staying up here on these slower time frames. It's staying up here. It's climbing. This is what we're seeing. And the dollar here is still falling. It's still falling on the Renko. It's down at 91.61 at the moment. I'll pull that over so you can see that. See what's going on. There we go. So it's still falling nicely. And yep. Let's just have a look at the currency array multiples, which I haven't isolated anything out, but you'll see the effect. That's cable. There it is. It's the strongest across the time horizons for the time being. Very strong trend. It's still up there. And if you isolate out in terms of the dollar, let's just see what's going on in terms of the dollar. Just isolate that out. And what we're looking for is a full house. So basically, by that I mean you want to see the Aussie dollar moving up here. It's pretty much universal. That down there, these align. We want to see Aussie moving up there, and we want to see these all bunched up. So basically, these all tracking up higher, up the array, and these falling down here if this is going to continue. But you can see the strength of that trending cable. It's strong, it's strong, it's strong. It's the strongest at the moment. And down at the bottom here, as you know, I like to trade short. So, you know, if the dollar's selling, I'm always looking to sell the dollar on a particular pair. So I'll be looking down at dollar CAD, all things being equal. That's not to say I would take it if there was a stronger trade on a currency pair that was trending higher. But you know, I do prefer trading to the short side. I'm well aware of my deficiencies, of which that is one. But you know, joking apart, do be aware of, if you have a bias, and I'm well aware of mine, please be aware of it, because it's the one thing I think that certainly stock traders, intraday stock traders, I think are blighted with, because the perception in trading stocks is always that they're going to go up. That's their persona, if you will. It is their trait, and partly it's more difficult to trade short. Well, no, not impossible. You can trade options, buy puts, and all that sort of stuff, and you can certainly trade it through spread betting. Is pretty straightforward. If you're selling the actual share, it's more complicated. But that's you know, it's a bias. So be aware of your biases. I'm aware of mine. Be aware of yours. Right, we've gone to time.
No one buys stocks that they're going to go down.
No one buys stocks because they think they're going to go down. Very true. So there we are. Let's just there we go. Back on where we were. So yep, that's it. I'm going to wrap up there. Just point you in the direction of all the various sites. This is the education program. This is where you will find the funded forex program. It is part and parcel, as Anna said. We do feel now it is a complete. We've it's a pathway that you now have to leverage your educational knowledge, come onto the program, you understand how the market works, and thereafter you are welcome to join the funded Forex program. It is only open to our students. The answer to that is very simple. The reason we decided that from the start was because we wanted to have people who we had trained ourselves, if you like, who had taken our education and understood what we believe you need to understand to trade these markets with confidence, and thereafter to then leverage that knowledge that you have and give you the opportunity to leverage it with our money, with these funded accounts, which go all the way up to 2 million. So you can find all the details there. Just click on the button here, and that will take you over to a page which explains a lot of the detail of that. If you have any questions on it, please drop us a line, anna@annacoulling.com or david@quantumtrading.com. More than happy to answer any questions you have on that, or indeed anything else. This is where you'll find the indicators: MT4, 5, NinjaTrader 7, 8, and TradingView. Yes, TradeStation is coming. 2 platforms, been a massive amount of work, but they are coming along, I can assure you. And then once we've launched those, we will be dropping back onto TradingView and porting over all the other indicators that we weren't able to do because the Pine script didn't support object and line drawing. It does now, so we can bring those over into TradingView, which is fantastic. So the package of TradingView will align price-wise with MT4, 5. And once we've done all that, we've got lots of other things in the pipeline as well. And remember, when you invest in the full package of any of these platforms, you automatically get any new indicators we develop for free. It's just our way of saying thank you to you for investing with us. And I know we've had customers with us for many, many years who started right at the beginning, and they've benefited hugely. I think we've had 5, 6, 7 indicators, something like that, which they've picked up for free. You don't pay for it. We just add it to your, whatever your platform is, you just get them. And that's it. It's just, as I say, it's just our way of saying thank you. Finally, you'll find everything to do with Anna over here at annacoulling.com. Links to all the sites, all the books up there on Amazon in Kindle and in paperback. So they are all there, along with all the analysis down here of that we do pretty regularly. So there we are. I hope you've enjoyed it. I can hear Anna clacking away in the background. Apologies, I have my chat box shut when I'm in full flow. So there we go. I hope you've enjoyed today, and we will be back later today UK time, 3 o'clock for the US session. So look forward to seeing you there. If you're not with us later on, have a great trading day. Enjoy the rest of the trading week. Stay safe. And we will be back with you next week, same time, 7:45 UK time for the London Forex session. So thanks for coming along. We do appreciate it and hope you've enjoyed it. See you soon and bye for now.